Fubo TV flying to the moon in 2025. Yes, Fubo TV is the talk of the town. Right here, right now. Up 250% in one day, folks. Yes, 251%. Will this continue? Or will this be one of those stocks, just like GameStop, that goes flying to the moon and crashes back down to Earth? Yes. Well, you're going to find out that and more on this channel as we look at why is this stock skyrocketing. Is Fubo TV the future? What has this new deal with Disney done? Has this helped this company go flying all the way to the top of the list of searching streaming platforms you want to watch your sport on? Well, you're going to find out right here, right now. As Disney has just taken 70% of Fubo TV right here on Barry Charles. You heard it here first. Let's get to it. Yes, 70% stakeholder Disney is portraying to buy Fubo TV, with Fubo holding on to 30%, with this little bit of a strange combination of the current managers, CEOs staying in place, but they only own 30% instead of 100%. An interesting move. But the board of directors will be all over Disney. Yes, majority Disney. So change in the board of directors is coming if this goes through the process, if it's not blocked by regulators. Yes, why is this good for Fubo TV, for instance, folks? The lawsuit is gone. Yes, the lawsuit is gone. Disney will pay the settlement of $220 million to get this out of the road. See you later. Thank you very much. And also a $145 million loan will go to Fubo TV as well as a $130 million termination fee if it does not work and the regulators pull out, so Fubo TV will not lose out on money there. Wow. The stock price goes from $1 to $5. Yes, it had been creeping up, don't get me wrong, folks, but it's really boosted yesterday, and will it continue going forward? That is the question mark you got to ask yourself. Will the streaming income continue? Are they trying to push up to be past Netflix? This is what Disney are trying to do, but they're a long way from happening. Disney's already a monopoly, and it's just going to get bigger and bigger if this continues. To be honest, I think it's a full man's game here from Disney. I think it's necessarily not the greatest thing. I mean, it could be okay, but I'm not saying it's the end of the world. This company is in financial ruin. Well, not ruin, but financials are all over the place, not good at the moment. Doesn't mean the future doesn't bode well. Well, if you stay tuned for the rest of this video, I will do a stock analysis, and right at the end of the video, I'll give you the potential intrinsic value of this company. Not financial advice. Do your own research before you enter into any stock investment. But yes, what is happening? What does the future hold for Fubo? Will it go from $5 to $10 to $20 to $50? Who knows? $100? You never know what happens in FOMO. Anything can happen. And we're still in a bit of a FOMO market, so it'll be interesting to see where Fubo ends up. People are making millions right here, right now, but will they continue? That is the problem. What I see is what's going to happen. This is going to fly to the moon. It could say go to $20 and then drop right back down to $1. That's where I see this company potentially heading. And especially if it falls through, well, it will be going straight back down there, maybe to bankruptcy. So it'll be interesting to see what happens there. So far, I'd say short term, that's a good potential buy. You could even buy it tomorrow at good prices. But to me, to say it's going to be an absolute streaming giant, I don't think there's enough there for Fubo TV. Growth in the numbers, I don't know if it's going to fly. I mean, it's not a bad addition added to the ESPN product, but to me, I don't know, I'm not sure with the Hulu, as well. It's going to be an interesting future here, what happens there. But yes, this is what you came here for. Yes, this is what we're going to do, a deep dive stock analysis of Fubo TV. Let's have a look at what the actual numbers are right now. Are they worth a potential buy at this moment, or are you really just putting dead money into a FOMO account. Well, let's have a look at Fubo TV stock analysis. Yes, well, we'll start off. The current share price is around $5. It could be $10 by the time you watch this. Who knows? But Fubo TV is on fire. The 52 weeks, as I said, could get $1.10, and now it's over $5. Congratulations to you if you were an investor. And yes, my nephew is an investor, but not world-changing share numbers, unfortunately. But still, profit by the end of the day. Just to give you financial, I personally am not involved, invested into Fubo TV. I had looked at it, but I just couldn't see the financials working for me. But definitely was thinking of it as a spec play, but they were my mistake. But in saying that, I'll take Palantir's returns over it so far anyway. Yes, looking at earnings per share minus 0.37, so that's not good there. So there's no P ratio because they're losing money, as well as no dividend. The short interest is 11%. I'm surprised it's not actually higher, to be honest. Market cap 481 million. Fubo, well, obviously the short interest was probably a bit higher after, at least after yesterday. Fubo TV's return on invested capital minus 24%. So they're not giving you any money. They're losing money on everything that's invested into the business right here, right now. Yeah, what do I see? Free cash flow is negative, I think, negative 14.8 million. So they really are losing a lot of money. And yeah, so I'm not seeing much goodness there. Whether how they can turn this around, Fubo TV is going to be in the negative free cash flow. But let's have a look at the Fubo TV's numbers right here for you. The revenue, how's this shape up? Well, at the moment, the annual revenue is 1.6 billion, up from 1.3 billion. So that's great. When you go to net profits, negative 205 million from negative 257 million. That's good. So they are, in terms of improving their net profit, that's good, but they are nowhere near where they need to be. We look at quarterly, overall they're 383 million. So that's very good compared to this is where it's interesting, the 5.2 million from 2.3 million. So they really have tried to, this is negative, so they tried to improve but it increased in the last quarter by double nearly, so that's the concern. So that's the thing, from 2.7 to 5.8, it's just a big jump. 5.2 is a big jump, so question marks over the future of how this company is going to continue to grow. We will see. Total assets are 1.1 billion compared to 1.2 billion last year. Total liabilities, what do we think about that, folks? At 511 million from 517 million. So it's going to be interesting to see how they go with that. The liabilities a little bit down. It's okay, but nothing to write home about. So Fubo TV, that is the financials. To me, it's not looking good at all. Negative net income, revenue growth. That's okay. That's a positive. That's gone up. But the rest of the ship, short interest, the return on invested capital, it's just looking dire straits for me as an investment. But well, let's see what the Graham's calculator and intrinsic value has to say about this. Interesting to see how it shapes up in the calculator. So what we're going to do, we're going to do a bear case, base case, optimal case, something like flying extraordinary and then flying to the moon, out of this world sort of numbers they put up. So we're going to do that. So how they calculate it, you do current share price with the expected growth rate going forward, with the earnings per share, with the current bond yield, gives you a potential intrinsic value. So yes, let's start off with from the bear case here. So the bear case, the current share price is around the $5 mark at a negative 0.37 earnings per share with expected growth rate of 10%. then you're losing $11 on every share. Congratulations to you right here, right now on what they're currently doing. So it's madness to buy the stock. But if we look at a base case and say they just get a profitability at 0.1 and 10%, they're at $3 and you're still overvalued. Now let's go to an optimal case, and this is when it starts to get a bit juicy. If you can get to 0.5 earnings per share, a 50% growth rate is $20 and you would buy it all day. So that's where the people right here, right now are thinking this is where the stock is going to hit. And then if you go extraordinaire, we're going to say it's going to go to 1 earnings per share, a 20% growth rate. And then you're looking at $50, folks. $50, yep. And if you think it's going to fly to the moon, and earnings per share is going to go from 0.37 up to 2, at a 25% growth rate from here to the end of moon, $122 you'll buy every single week, and it'll be a 10x for you. Yes. So what does this mean for you? Fubo TV is nowhere near a 10x stock for anybody at this stage. If they can continue to, they can get themselves to profitability, then you're starting to talk about a company that could go to that sort of territory. But right now it's just absolutely not even profitable and all that jazz. Disney will help with the buying of Disney, but yeah, to me, for this to be your next 10x stock, I'm going to say no, it won't be your next 10x stock. I think there's better opportunities out there. But if you were in, congratulations to you. Congratulations, and it could go a lot higher. I suggest sell before it goes down. Anyway, that's the Barry Charles news for this episode. Fubo TV is at the time to buy, potentially in the short term, but long term, I'm not sure if this is a company for you. But that's just my opinion. You can make your own opinion. Remember to like and subscribe to the channel, and I'll be back with another video just like this for you each and every week on the channel.